If you're a business owner or self-employed, there's one key tax question you should be asking yourself right now in July to make sure you're prepared for year end. How much income am I making, and how does it compare to what I projected? That's going to give you the foundational information of how to adjust things. If you don't know it, you're flying blind. That's what we're going to fix right now. Welcome to Taxes Suck. My name is Matt Speckman. I'm a CPA. I'm an owner at Advantage Through Accounting, where we help people take care of their tax situations. In this case, what are we looking at? Business owners, self-employed, somebody whose income does not come through on a W-2 at year end. You don't get a pay stub from your employer, meaning you have to worry about all the key components of your income, your expenses, your tax payments on your own, and you want to know what you're doing. And we've already talked about the key item. What are we talking about in this video? Income versus your projections. And of course, you need to have a projection to compare it to, right? So if you don't have that, that's something as a business owner you're going to need to start doing if you're ever going to want to get in front of this stuff, be able to be proactive and really understand your trajectory. We cannot forecast items with a blank slate. We have to have something to compare it to so we know if you're going up or down from what you expected. Now, in this case with income, it is a simple exercise in practice, but there's many elements that go into it, and it leads to many other factors you have to consider. So let's just do a simple example right here. Let's say, in this case, we projected $90,000 in income for the year. So we reach July, and what do we have? Let's call this our mid-year comparison. Yeah, sure, like that, NYC. And what are we at midway through the year? $60,000 in income. Now, important to know that these numbers aren't just going to pop up and present themselves to you, right? There are things you got to be taking care of as a business owner and a self-employed individual to get to this spot in the first place. You have to be tracking stuff, whether it be through a bookkeeping system, QuickBooks, one of those programs, or simply in an Excel spreadsheet. You need to know what you're on track for in order to project anything. And you need to be doing it correctly, making sure you have all your expenses in there, reconciling your bank accounts, etc., etc. We'll get into the details of that in another video. Point being, you have to be able to arrive at these comparisons. So, what was our projected for the full year? $90,000 in income. In July through June, as we're checking in July, we're at $60,000. What does that tell us? It means any projection built upon $90,000, if we're making payments based on that amount, tax payments, for example, or just projecting out how to do our retirement contributions based on a certain amount of income, well, what we see here is we're clearly on pace to surpass that $90,000 right now on a surface level. There could be many reasons that the second half of the year, maybe you expect less income. Maybe you only expect $30,000 and you're right on track with that projection. Maybe you're going to explode, and maybe you know that Q4 is your best time of year, and that's when you see most of the sales. So not only are you already ahead of the game, you expect that number to go up and up further above your projection. Very, very important information to understand in order to be proactive. If you're working by yourself, working with a tax advisor, working with anybody else, they need to have the underlying information of how you got to these things. If you're just pulling information out of your head, what you're doing, that may help us evaluate the position you're in. It is not going to tell us how to project things. It's only going to lead you the wrong direction if you don't have the key elements that support these numbers. So we get to that point, main point being, we can see on a surface level that this number is going to be higher than our $90,000 projection. And let's assume that's true. Let's assume that's the case. We're actually going to have a big Q4 like we just talked about. Well, let's say we expect that to be, let's say $130,000 at year end. So if you built a plan based on $90,000 in net income, you got $40,000 additional you need to both plan with your business, plan tax payments around, plan how to make retirement contributions, etc., etc., etc. How can you manage that money in the best way possible for you? Well, in this case, let's just focus in specifically on how to build out our tax profile further. What this is going to mean for you is simply that you're going to owe more taxes at the end of the year than you expected. So a good portion of that additional cash flow is going to be used to manage your taxes. It sucks having to pay more, but that is the trade-off of making more money, having a successful business. You're going to owe more taxes, and you simply just want to plan for it. If you know what to expect, you're not going to find yourself in a position where you have to make a $10,000 payment at the end of the year, and you're like, oh my God, I can't do it. I spent it on X, Y, or Z. I don't know how I'm going to make this payment. No, you're ahead of the game. You plan for it. You set the money aside. That's what understanding your income can do. It is going to form the foundation of everything else you do when it comes to taxes and the decisions you need to make. Get on top of your income and the rest will be able to flow out. We're going to take a look at those other elements in the next videos we make. Understand your income before you even get to looking at those.